what would be the three skills, but maybe skills, not personality traits, that are way different from selling into SMB or selling into enterprise?
Yeah, I think you need to understand the different framework behind an enterprise deal.
Okay.
Like more stakeholders involved, more complex, automatically more negotiations happening.
Okay.
Right?
Makes sense.
That's one point. Then I think another one is as well handling different emotions, because every different stakeholder has different emotions, and every different stakeholders have their own interest in every single part of this process.
Yeah.
So
egos and powers. And
you need to
everything.
you need to understand that, and as well the structure is not a straight line.
Correct.
I love to say it's a spaghetti plate. So you need to go to this guy, then you need to go to procurement, then you need to go to
spaghetti.
Yeah, so it's like a spaghetti plate.
We can create the spaghetti framework for enterprise.
Yeah,
should we good?
I think it's a tough one to figure out, but I think you need to have a good structure in your head.
Awesome.
How you want to approach those deals.
It's
right?
crazy.
But Ellen, you tell me about SMBs, right? What is the best framework to tackle SMB companies?
I think that if we need to put it into a strategy, the speed to closing ratio should be it's crucial here. And that's the methodology that we always apply. That it's when we understand that we are selling deals that should be closed, or the average closing rate is within 21 to 28 days.
Yeah.
Dynamics are everything. You need to understand how a CEO delivers, thinks, and make decisions. You need to understand what are the things that are going to be impacted when they are making that decision, and what are the things that are going to be impacted if they don't make that decision. And with all those factors, you need to influence the speed of the lead.
Please repeat that. Make it simple in 30 seconds for our audience to understand.
So basically, when you're selling to SMBs, you need to understand how a CEO thinks, the dynamics of a founder, and two more things. What are the implications of making that decision, that could be buying your solution? And what are the implications, and most important, of not making a decision of buying your solution? Because all those three factors will determine if they buy from you or not. They want speed.
Got it.
They want to decide.
So is it a straight line in SMB?
At some point it is. There's nothing like from A to B super smooth. Nothing in sales, I would say. But it's more straightforward than, for sure, enterprise or mid-market high-end, because they know what they want. You need to deliver. It is a yes, it is a no, it's a maybe. Why? We qualify or disqualify, right? And we move into the other one. Most likely, and you can basically address this when I look into my clients' pipelines and say, okay, help me understand my pipeline. Okay, are you selling to enterprise? Yes. Show me your pipeline, and your pipeline has 129 open deals. I'm telling you, you're screwed. There's no way you can handle 129 open deals in enterprise. That means that you're not qualifying, your pipeline is a mess, you're not closing them, you're not asking the right questions, or you're doing everything at the same time wrong.
Yeah.
But if you have 12 deals open or 7 deals open, that makes more sense. On the other way around, if you are in SMB and you have 7 deals open, you're screwed. You need more volume, you need more speed.
Definitely. I think it's really about quality than quantity in enterprise, and the other way around in SMBs, right?
Absolutely.
You need to reach your annual target. And I think one important factor is your pipeline coverage, right?
Can you elaborate a little bit on that? Because I always listen about pipeline coverage, something the CEOs and VPs of sales love. What exactly does that mean?
So usually you should have 3 or 4 times pipeline coverage, like amount, let's say a dollar amount of deals in your pipeline, which is 3 times or 4 times your
quarter,
your annual target, or your quarter, how you want to see it, right? So to make it more simple, let's say you have a
1 million yearly quota.
Yeah, you need a 4 million pipeline, right? So
open pipeline source.
Open pipeline, correct. Of course, it's a good indicator. There are more factors which as well are important, right? For example, deal size. How big is the deal size, average deal size, to bring you to your target?
Absolutely.
How much is your close rate? If you have a close rate of 30%, you maybe need less in your pipeline than someone who has a close
15%
15% close rate, right? So there are many indicators which
that's really interesting, man. So there are KPIs. Sorry to interrupt. I think that this is really important. What you're saying is there are KPIs that as a seller you must know them.
Yeah,
right? You must know your numbers. What are those that you're mentioning?
Definitely average deal size. We want to try to improve that as much as possible. It means adding more products to your offering to increase the deal size.
Okay.
So it's number one. Number two is your pipeline coverage.
Perfect.
And number three is your close rate.
Okay.
Close rate. How many, if you have 10 deals, how many of these 10 deals you actually are able to close? Let's say you have a close rate of 30%. Out of 10 deals, you know that 30% usually, 3 deals you will close.
That's awesome. So if we make a number here, correct me if I'm wrong.
Yeah.
So if we are talking about enterprise deals, going back to the pipeline strategy or pipeline analysis, for example, if you are average, if your target is 1 million a year and you need a pipeline coverage of 4x, that means that you need a pipeline of at least $4 million in revenue, open deals, right? Opportunities. That means that if you close average deal cycles of $500,000, just to put a round number here, you need at least 8 open deals in your pipeline. As we were saying before, if you have 129, you are screwed.
Yeah.
If you have 8 open deals at an average of $500,000, you have your pipeline coverage done.
Correct.
And if you close 30% of them, right, you are going to close X amount of money. That's how you start doing the reverse engineer and calculating your execution.
So the idea here is as well, like, of course, have some smaller deals in the pipeline, because having this bigger deals always will not happen. As well, I'm a person who still needs sometimes the adrenaline. So I'm happy as well with a 90K deal.
Exactly, you're closing those faster ones at some point.
And have the good mix out of it. Right. So just to have the traction and the possibility to close them.
That makes sense.
Yeah.
Let's jump into a new topic
Tell me.
that is related to this. So we have SMB, we have enterprise. We're talking about how high level they behave.
Yeah.
Let's jump into more tactical negotiation strategies here, right? When we talk always about discovery and demo, but let's go a little bit further down the line, like negotiation.
Yeah.
I want your insights. I want your questions. I want everything about your expertise.
Put a topic.
Yeah.
And I will ask you the question.
No. It's what are those negotiation strategies that you've seen in enterprise?
Yeah.
Or in SMBs, or comparing one to the other, that were more successful in your case, and I can then share mine as well, and so on.
In enterprise, for example, building this sense of urgency.
Oh, I love that.
Doesn't work that good.
Okay, tell me why.
I think you shouldn't put your buyer too much under pressure, because then they get pretty fast
cold.
Yeah, cold or defensive.
Okay.
So it's really about relationship building.
So you cannot force political internal decisions in a 5,000 employee company by just creating urgency.
I was trying it with one big automotive client.
Okay.
And I said, hey, like we have their new year begins, we have a price increase.
Exactly. How do you create that sense of urgency? It should be done right now.
It's tough because, most of the time it's also out of their hands, because they have to follow an internal process, which they cannot jump over.
The bureaucracy of...
Yeah. So like, yes, I know. Sorry, Kevin. But don't put please this pressure on me, because as I told you, the topic is currently with our procurement department and I have no chance to impact that.
Yeah.
So I said, okay, could you share with me the names of the procurement department? Maybe I could speak directly to address any potential concerns which came up, right? Trying to still talk with the people and see if there's anything happening. So like I said, be like the helping person to be able to navigate the process to make it as smooth as possible.
You become like a trusted advisor, right?
Yeah, that's the goal, right?
Exactly.
You be the consultant, not the sales guy. Right?
Exactly.
Everyone says that, but it's true. If they feel that you are like, sign now or we increase the price by 50%. No, what the fuck? It's not possible. And you lose your trust, you use your relationships you build over a period of time.
So would it be fair to say, in a nutshell, that what you're sharing here is, hey, I want me as a seller to become a trusted advisor, a consulting guy, not just the pushy seller, because no matter how much urgency I can create, there are some things that they will go with the flow internally.
Exactly. It's
right?
not that you can jump over the internal processes. It's almost impossible, right? Different, of course, in an SMB business. But tell me more about your favorite negotiation tactics you have.
We were talking about speed, right?
Yeah.
When we were talking about SMBs, and speed is driven by tension, is driven by urgency, or is driven by scarcity.
Yeah.
So if you can apply one of those or all of those at the same time, most likely either you will lose a lot of prospects that you will burn them out. There's a gray area there and a thin line that you don't need to cross. But strategically speaking, tension means that you are saying or working into something that will move their needle in terms of revenue, time, investment, speed to market, etc. Whatever the KPI that they are mentioning. Urgency and scarcity, it's making them feel that you won't be there forever.
Got it.
Basically.
Got it.
So
can you repeat that again for the audience and give me one example, a clear example? Let's say I'm a potential buyer and the CEO of a company, and you apply tension.
Okay, perfect. So I would do the following. If I know all the factors that you consider in order to make a decision, the first thing that I would say is, hey, Kevin, from what you're telling me, and I apply the first rule of negotiation or the first technique, that is mirroring or matching. That means repeating exactly what you were saying in your own words.
Amazing.
Right?
Yeah.
So you will feel, as psychologically speaking, that I'm paying attention to you.
Yeah.
And that will lower the barrier and the friction. So it's like, hey, Kevin, you told me that it's top priority for you that you increase by 10% a month over month, over the next 12 months, over the next year. In order to do so, you need XYZ process. That is what I solve.
Yeah.
Right? The thing is, if you want to do that, by next month, we need to start applying that right now. Tension.
Okay.
That's important. The tension is applied right now. It's not like, oh, you tell me when we want to do it and we do it. No. We need to start right now if you want to achieve these X results. In your words, you told me that.
Yeah.
So I'm using your words to create some tension.
Really?
Now I move into urgency. It's like, look, there is one way that we can do that. But let me tell you, and let me be straightforward. Here is the second strategy. That is anchor. The anchor strategy, the high anchor. As an anchor, you say something super high and then you lower it down to make them feel that they are getting a bargain from you.
Oh, that's interesting.
Yeah? So basically, you say, hey, Kevin, you know what? You are willing to get a 10% growth month over the next year. And you want to start next month. In order to get that, you need to start right now.
Yeah.
In order to start tension, in order to start and to make that happen, we need to implement the process and make this up and running right now. You know what's happening right now is that this usually, with the speed that you want, this usually costs, with the amount of users that you want and the process that we're going through, between 25 to 30K per month.
Mm-hmm.
But forget about it. We can start with the current plan and I will fight internally, right? And we will make it at 15K.
Yeah.
That's the anchor. I mention a higher number, but then I go back to the regular number and you think that you are winning a battle here.
Yeah.
Right? That's urgency. And the third one, scarcity. That is, but if we do that, and if you're okay with that, the only way that this could happen is if we make it happen by the end of the week.
Very good. Yeah.
Because if not, this is going away.
Yeah.
And you make that sense of, this is going away, it's scarce.
Yeah.
I need to move on.
In 30 seconds.
Let's recap. So for SMB negotiation, apply tension, urgency, and scarcity. The first way to do that is tension. When you have all the features, all the criteria, all the information from your prospect, repeat that in the same way that they mention it in a potential way. If you want to achieve exactly the same words that they use, you need to do X thing. If not, that won't happen.
Yeah.
That's how you create tension. Then you use urgency. That it's within the anchor strategy, you go into pricing, you label something into a higher number, but then you go down, making them feel that it's a concession for them.
Yeah.
Yeah. But that needs to happen right now.
Yeah.
And that's how you make that scarce and urgent.
Got it.
And that's how you move the needle, either for qualification or disqualification. But you are positioning yourself as an authority figure.
when we prepared this podcast, I saw you applying this strategy, actually getting in some sponsors here.
Really?
So,
No, don't say that to our sponsors, man.
it's about sales.
It's human. It's human.
It's a confession. Hey, guys, it's a confession.
Confessions of a seller.
So we have to confess.
We need to confess.